If you are a retail trader who works a job and doesn't have as much time to day trade, I want to give you a few tools that professional traders use to find high probability swing trades and put the odds in their favor. If you're looking to hold a trade for days or weeks, the very first thing you should check is seasonality. If I'm going to go long the euro dollar, I need to put the odds in my favor. So how many times, you might see, has the euro dollar gone in the direction you're looking to take over the last sort of 10 years? So we would look at what's called the return percent distribution. This just gives you a binary answer as to how many times the euro over the past 10 years has ended positive or negative on the month. Let's say we're in March. I can take a quick check of our return percent distribution, and what does it tell me? 64% of the time over the past 10 years, the euro ended the month positive. So right away, I know I want to long the euro for a swing trade, and I need a really good reason to go short. In fact, I need an even better reason to go long in February. Look at that, 91% of the time, the euro has ended the month lower. Let's stick with our March example, however. The next thing I might want to check is, what is my potential return? If I only stand to make 1%, this is going to influence how much I risk. Obviously, we don't want a negative risk to reward ratio. So I look at the return averages, and the graph looks like this. If I hover over the chart in March, the 3-year average returns 2.58%, the 5-year is 0.76%, the 7-year 0.42%, and the 10-year is 1.01%. If I take the average of these returns, I get 1.19%. So it wouldn't be unreasonable to have a goal to make 1.19% on this swing trade. So this could mean, for instance, as long as if your expectancy wasn't good or you're unsure on the expectancy, you would want your risk to be at least half of this so that you get a good risk to reward ratio. Okay, what do we have so far? We have a pair to trade that goes our direction 64% of the time in March. We've got an expected target of 1.2%, so we know that our risk should be around 70 points or so. But we want more edge, so let's look at what major participants are doing. And this is where the Commitment of Traders report helps, the COT report with the data. We've organized it into our positioning app easily for you below. Understand what's going on. Now this is released every Friday at 3:30 p.m. Eastern Standard Time, but it shows positions as of the prior Tuesday. So it covers all US futures markets and can give us some valuable insights. Who are the players? Well, the COT report includes two primary types of market participants. The first are commercials, also known as hedgers. Now the commercials are typically large corporations, banks, importers, exporters who use the futures not to speculate, but to hedge their real world business exposure. Their activity often reflects fundamental value in the market, and they tend to behave in a counter-trend manner. They tend to buy when prices are low and sell when prices are high. Because of their deeper ties to the underlying asset, they're often viewed as the smart money. The second major group is leveraged funds, which includes hedge funds, commodity trading advisors, and macro funds. These traders are primarily in the market to make money from price movements and are typically trend followers with high turnover. They're more likely to take speculative positions, riding market momentum rather than fading it like commercials often do. So their activity can often provide insight into short-term sentiment and speculative positioning. So we want to follow the hedge funds while open interest is in extreme levels. So if you look at the chart, we see something very interesting on March the 3rd. You see the green line are the commercials. They're interested in hedging their position as the euro moves higher. The gold line, it's hedge funds, and they were looking to go long the euro for momentum trades and to capture upside as speculators. So what's happening to this line? It just crossed over and is starting to diverge. Commercials are hedging their risk as the euro moves higher, and hedge funds are starting to get excited about the prospect of making money on the euro as it moves up. But we also need one other detail. We don't want open interest to be at an extreme level necessarily in this situation, because then that could be a sign of a potential reversal, maybe the market's getting overheated. Instead, we'd like open interest to be a moderate level with room to increase in this particular trade. What do we see? Open interest sitting at around 35%, plenty of room to run, and not at historical highs like it is right now. So do you see how we sort of start adding up all those different pieces together? To put the odds in our favour, we were able to quickly identify a pair to swing trade that wins most of the time in March. The euro's moving up. There's reason for us to be able to identify how much we should risk and how much we should target before trailing the trade. So we're able to see that major hedge funds and leverage funds agree with us. We were also able to see that we were not late to the trade, with open interest being at moderate levels still. Now the only thing of course is left is the technical entry. Here we can see a consolidation and we can buy the breakout with a stop just below the one-day breakout candle, and we could have locked in potentially multiple R's depending on how you manage the trade. And you can see there's a textbook head and shoulders pattern down there at the base. Now I hope you can see how many odds we put together in our favour before even thinking about a swing trade. There's such huge advantage when you put hard data to work to put the odds in your favour. There are so many other ways you can use this tool, and we will include a video explanation with the sentiment and positioning indicator so you can take advantage. So sign up below and you'll receive the 26 instrument breakdown, net position by trader type, the hedge fund long short ratio, the open interest percentile, monthly performances averages, return percent distribution, the seasonal performance heat map. Sign up below, and this array of tools will truly help you with your swing trading.